Bollinger Band. This is very important study for the people, those who want to trade, to find sideways market, to trade in a trending market, to find where the market will take support, resistance. If this study is properly understood, you can trade with the help of this study. So let us first understand the history of the Bollinger Band. The Bollinger Band was developed by John Bollinger in the year 1980 to specially trade options. This study very well defines when the volatility of the market will be maximum and when the volatility will be low. So what happens in such a scenario when the market volatility is known, option trading becomes very easy. So this is one of the important tool to trade in futures or to trade in the options. Now what happens, the Bollinger Band comprises of three lines. They are two moving average 20-20 and the middle moving average is a 20 moving average. So how is the upper line and the lower line is formed? From the middle 20-day moving average, two standard deviation is added to the two moving average to get the upper line, and the two standard deviation is subtracted to get the lower line. That is how the structure looks like. So whenever the market volatility becomes reduced or the market goes in the sideways, this band contracts and this band expands when the volatility increases. So this is the formula that is shown on the screen. Using this formula, you can create a Bollinger Band. Now, if you want to use it in the software, everything is available freely. Just go to the indicator, input simple 2022 as your parameters you will get. We use one more parameters, that is 2021 in our one of the strategies. That will be explained to you in the later part of the video. So this was regarding the formula that is shown onto your screen. Now we will in this video understand three strategies. First is overbought and oversold zone strategy. Next strategy is multiple band trending strategy, and the third strategy is the squeeze strategy. So what happens when you understand all the three strategy, you are able to predict the sideways movement, you are able to predict the trending movement, you are able to predict the market when it will expand. So that is how the band works. So let us now for the first time understand how will the overbought and oversold strategy will work. So first condition to see the overbought and oversold strategy is this band flows either in the north direction or in the south direction or in the sideways zone. So the first condition to see overbought and oversold parameter is the band should be flat. Then only this condition is applied, otherwise these conditions won't be true. So both the band, the lowest Bollinger Band and the upper Bollinger Band should be flat. If you understand this, then you can apply this strategy. Now, when to apply this strategy? Whenever the Bollinger Band leaves the upper band, then you can apply this strategy. Whenever the Bollinger Band leaves the lower band and the structure is flat, parallelly it is moving, then you can apply this strategy. So now in the chart you see, you will find the structure has become roughly flat and the pattern, the price has left the Bollinger Band. So that becomes the overbought zone. Now when the oversold zone was there, it was touching the band. The moment it left the band, and both the bands are roughly the flat, that is upper band and the lower band, so it becomes a oversold zone. Similarly the overbought zone. So this was regarding the explanation of the band strategy. Now I will show you many examples how this strategy looks like. Now you see Nifty 50 chart onto the screen. So here you find the bands are flat. It is moving roughly in the direction of a flat line like structure. So when both the bands are flat and when the price touches the upper Bollinger Band, now you see if it leaves the upper Bollinger Band, the market will tend to take a support at the lower Bollinger Band. When it takes the support at the lower Bollinger Band, market will tend to take the support at the lower Bollinger Band and resistance at the upper Bollinger Band. That is how this strategy works, and it very beautifully defines the strategy. So this is how, and the moment you find from this flash structure, one of the bands starts to get a curve downward or upward and it is not leaving the band, that means the trending market has started. So this is how this strategy needs to be used. Please remember, this strategy is for a flat like market. This strategy is not for a trending market. So again, you see the Nifty Bank Nifty example. The markets are roughly flat. So market will take a resistance at the upper band and take the support at the lower Bollinger Band. This is how the strategy is used. So you see overbought zone twice or thrice has been attempted, and the oversold zone twice has been attempted onto the chart shown onto the Nifty Bank. Now you see Hero Motocrop, again upper band, lower band, and overbought and oversold. Now you see Asian Band, again upper band, lower band, and you see the strategy. Again you see the Wipro, upper band, lower band, and this strategy. Now again you see Infosys, upper band, lower band, and this strategy. Again you see the example of Maruti Suzuki, upper band, overbought, lower band, oversold. HDFC, overbought, oversold. And Tech Mahindra, overbought, oversold. And Bharti Airtel, upper band, overbought, oversold. So this strategy, very beautiful work, but the only disadvantage for this strategy is market should be flat. The band should be moving like at the degree of 180. Then only these strategies can be applied. Otherwise, this strategy cannot be applied. So this was all regarding the strategy number 1. Now, you know this market has a nature. Market will not be always in a sideways mode. Market will be having a trending mode. So to explain the trending mode of the strategy, I will like to explain you strategy number 2. That is how to multiple band are useful in this strategy. So when we take the multiple band, first let me explain you how the multiple bands are formed. So our parameter for the outer band is 2022 and our parameter for the middle band is 2021. So upper Bollinger Band and lower Bollinger Band, when they are outer, the parameter is 2022, and for the middle band the parameters are 2021. Now you see, now we have divided the entire band structure into 3 structure. One is a upper band structure, one is the lower band structure, and one is the middle band structure. So the market, if it is moving in the upper band, we say market is trending and it is moving upward. Till the time the market doesn't fall into the middle band, the trend continues upward. The moment it falls in the middle band, the trending market has weakened its position. Similarly, when the market is only moving in the downward market, it shows the market is in the downward movement. So you can see under the chart, uptrend has shown the market was clearly moving in the upper band. So it was just moving up, up, up. Now the market was moving continuously in the uptrend, and then it was moving in the downtrend. So this strategy, whenever the market is in the upper band, it is up, trending upward market, and whenever the market is in the lower band, it is trending downward market. So onto the chart, I would like to explain you with few examples. Let us take the Nifty 50 examples. So Nifty 50, you see clearly uptrend. When the market was moving uptrend, it was clearly moving at the uptrend. The moment that momentum has weakened, it first enters into the middle band, or it may touch the lower Bollinger Band, and then what? After that, whenever it touches upper band, there is a sign of weakness. So till the time the market is in the upper band, market tends to move higher. Now when the market turns downward, when it goes in the downtrend, then the market has a tendency to go in a downtrend. Whenever it is moving in the lower Bollinger Band, market will have a tendency to move downward. This is how the market moves in uptrend and in downtrend. Now let us take the Nifty Bank example. Again, you see the same structure. Here the market is continuously moving in the uptrend, then in the downtrend, then in the uptrend. So market will move in both the direction. If it is touching the lower Bollinger Band, it is in the downtrend. If it is moving in the upper Bollinger Band, it is in the uptrend. So see the Tata scale very beautifully how much whenever the swift move comes upward, with move with comes intensity, you will find market will never leave the upper Bollinger Band. And whenever the market is moving downward, you will find market will never leave the lower Bollinger Band. Now you see the Wipro. You will find in Wipro, market is continuously moving in uptrend, market is continuously moving in downtrend, and whenever it is moving in uptrend, it is continuously following the upper Bollinger Band. Whenever it is moving downtrend, it is following the lower Bollinger Band. Now you see Tech Mahindra, the market is moving uptrend, market is moving downtrend, so it follows the strategy very beautifully. So again you see the Bajaj Auto, you will find a swift up move. The move with the intensity has only happened when the market is in the uptrend. The downward move, so the intensity has only happened when it is continuously touching the downward move. Kotak Mahindra Bank, again you find uptrend, downtrend whenever it is moving. ICICI Bank, uptrend, downtrend. So you can take the advantage of this uptrend and downtrend in the upper Bollinger Band and you can get the advantage. See the UPL chart, very beautiful up move has come only when the band was touching upper Bollinger Band. Very beautiful downward move has come only when the band was touching the lower Bollinger Band. So the uptrend and end of the uptrend or downtrend happens when after moving in the upper Bollinger Band, the market enters in the no man's land area, and when the market enters in the middle band, and after that whenever it touches upper band, it shows the trend has begun. So with the help of a technical analysis indicator or any indicators or the trend line indicators, you can understand now the market has begun, now it can move downwards. This is how the Bollinger multiple bands trend strategy needs to be applied and used in your chart. So just now I will take the area. Now you see the market has moving upward. Now it has entered in the no man's land area. So once it enters in the no man's land area, two conditions arise. Either after entering in the no man's land area, it will try to move upward and then downward, or it can directly move downwards. So seeing the other condition, but that much for sure, you can exit from your position whatever you are holding. And if the Bollinger Band becomes flat, then it will have a nature to take resistance and support at the upper and lower Bollinger Band. If it is touching the lower Bollinger Band, then it will move in the downward direction. This is how the end of the trend needs to be understood based on the multiple trend strategy. So you see the market was moving upward, it landed in the upper it landed in the middle band, and then it touched the upper Bollinger Band and then it started to move downwards. So again, whenever you find such a condition, you find the market will either goes in a sideways or market will end up trending. Market will end up the up move or down move. So you see the Nifty Bank 50 example. Again, you see that the moment the trend was moving upward, the market landed in the no man's land area, then the trend has shifted downwards or it has went into a sideways mode. So the moment the market enters in the no man's land area, you will find that is a signal of market changing the trend. Now you see in the Wipro, very good, market has enters in the no man's land area, then it took the resistance at the upper Bollinger Band, and then when it left, it started to move downwards and then it was up moving downwards. So now this downward move will end the moment the market enters in the no man's land area, you should exit. Now you need to see how it is reacting. If it is starting to move upward towards the upper Bollinger Band, then you need to create a long position. Now this long position can be exited, the market enters in the no man's land area. And now it will, if the markets are flat, it will take support and resistance around the lower Bollinger Band and then it will move. This is how this strategy needs to be introduced. The same you find in Reliance, the same you find in Tech Mahindra, how the upward move has entered. The same you find in the Bajaj Auto, the market was moving up, it enters in no man's land area, then it took the resistance, then it become flat, and then it was moving upward, downwards towards the band, and then it started to move downward, and then the new downward move has come. So this is how you need to read the end of the market move. So again, you see the Kotak Mahindra example very beautifully. The same strategies applied. You see Bharti Airtel, again the same strategies applied. You see UPL. The market was up move, it ended, landed in the no man's land area, that ended the trend. Market was in a downward move and it landed in the no man's land area, that ended the trend. Now the market was in the up move, it landed in the no man's land area. Then first it went upward, again landed, and then it went down. So this is how this strategy can be applied. So one more beautiful strategy of Bollinger Band, that is the squeeze strategy. This squeeze strategy is very useful for the people, those who want to trade in the option. Whenever Bollinger Band contracts, at that time you can use this strategy. So whenever the Bollinger Band contract, the possibility is there can be a big up move or down move. We do not know the direction, but that's what probable. The market will either move upward or move downward. This is how the Bollinger Band squeeze strategy works. So very beautifully, if you will find, if the upper Bollinger Band and lower Bollinger Band contracts, then you will find a swift up move. So you will see here the Bollinger Band has contracted, and you will find a great downward move and a great upward move and a great downward move. So squeeze gives you an indication that the market will now move upward or downward. So you see in the here Nifty example, market has squeezed and then moved downward. Market has squeezed, then moved upward. You see Bank Nifty example, market has squeezed, then moved downward. Market has squeezed and then moved downward. You see Bharti Airtel, the first up move has come, then the market has squeezed, then the downward move has started. So whenever the squeeze happens, it gives you the opportunity that now the big move can come. Direction we don't know. So whenever it is touching upper band, it means upward direction. If it is touching lower Bollinger Band, it means a lower direction. So squeeze gives you an opportunity or the area to enter. See Kotak Mahindra Bank, it moved upward, then moved in a downward move, and then the upward squeeze has come. Again it moved in a squeeze mode, and it started to move downward, and then the downward move has come. Again you see Bajaj Auto, squeeze and up move, squeeze and down move. Again you see Cipla, market has went up, squeeze, then moved downward. Again market went up, squeeze, then moved drastic up. So after squeeze, you will find the chances of market giving a big momentums are quite high. Again you see Tata Motors squeeze and then up. Again you see Tata Motors squeeze and then. So this is how beautifully we have explained all the three strategies. So I would like to repeat, first strategy, overbought oversold zone only applied when the band is parallel. Then the trending market multiple band strategy, we divided the band based on two Bollinger Band into three bands: upper band, lower band, middle band. So when the market is in the upper band, market will move upward. When the market is in the downward band, market will move downward. When the market is in the upward, comes in the center, and then it will move, take a resistance and come upwards. So this is how the multiple band strategy works. And the last strategy was a squeeze strategy. Whenever the band contracts, there is a possibility, the volatility contraction is there, and there is a possibility after this a big up move or downward move can come. So this was regarding the Bollinger Band. We tried to explain you in detail how you can use the Bollinger Band. Now, if you like our video and if you like to take such a knowledge in deep, please do not forget to subscribe to our YouTube channel. So you will be getting the latest update from our side every week on some new strategy, so that you can make your journey of trading easier and very good. So thank you once again for listening to this video.